Hello friends, hope you guys are doing well and trading well. In this video, what I am trying to show or explain or detail the typical mistakes even experienced guys make while trading. See, if you happen to be a patient trader, you want to short this market because this the market begins here, then it's slowly climbing up. You want to short somewhere here. Where do you go? Where you are going to short? Short sell. So you obviously look back the previous high in the near future. When price reaches that level, what you often do is whoa, wait, okay, this you look for reversal signs, right? Okay, okay. See, there's a hard tail. There's a tail, or pin bar, like other people say. It's a pin bar. So what people normally does, okay, when the high breaks, they look for some indications to go short. Okay. Oh, here we got a reversal sign. See, buyers bought it up, sellers smacked it down. So, what normally people does is they sell here, put stop above the spin bar and wait for the range to fill, mountain to fill. What happens? See, there are people in the market who are smarter and have deep pockets. What they do is they know your stops are here. Let me put the stops there. Okay, they knows your stops are here. Your stops are here. Your stops are here. Your stops are here. They all know. See, some brokers, they do trade against you. They do have in-house trading team. They all can see your stops are piling up here. They have special software. They have algorithms. They have everything to display your shorts are here. So you always thought that put the stop above the last high before when you are shorting. So you trade here. you did you place the stops above this. They all know this. So what they do is they want to fill a large number of orders. You are selling only one lot or 10 lot maximum, but there are people who want to sell hundreds, 200s, 300s. That you can find very quickly. Just go the uh, order window, time of sales. You can see that there are people who are selling hundreds of lots. So what you need to do is, this is your high. Let's put a text. Previous high. Previous high. You look for an indication, but don't enter the first time. Let it go. Let the trade miss you. Don't worry, don't enter there. If you enter at the first indication, your stops are going to be taken. You will be out of the market no matter what you do. This is applicable only when you are trading at a significant level. Okay, if you are trading in between, this is perfectly already. You can do this kind of pin bar techniques. There won't be major players at that. So when the market breaks previous high, you patiently wait. Let go the first chance. Don't be an impulsive guy. Let go the first chance. Okay, don't worry about the first one. Look for the second one. Okay, let go. I am emphasizing this. Let go this bullshit out of your way. Okay, then what we'll do, your stops are here, then there's a strong push. I cannot, because I'm having a cold, so I cannot emphasize much. There's a strong push through the, they have knife. They just pull through this. They just splash through these stops. These are the stops, stacked stops. They love this. So when if you want to make money in the market, there's a item called sell high, buy low. So what you are doing, you sell here, you buy the high. That is going to, put you at risk. So they just show through the market. This is an indication stops are being eaten by the sharks or whales. So what you do is you patiently wait to happen this. Okay, then what you do, then there is an indicator which help you to identify what need to be done. This is the volume. See, look at the volume of this large bar, look at the volume of this next one. See, it's almost equal. That means who is controlling this? Now the buyer market open here, closed here. Buyers are in control. Here the sellers are in. This is a doji, inverted doji. This is an indication. Let go this one. Then see the next one. So this is a clear indication that market is turning. So what you do here now, let me erase everything. Let me put the previous high back there. I will merge this so you can see this. The, see this volume. See this bar volume. This bar volume. See now what you do. If you happen to sold here and you put stop slightly above, maybe a 15-point stop, then what you need to focus is risk reward. Now you are risking 15 points, you should get at least 3 risk reward, 3. So you need to come to this area at least to get that kind of risk reward. So what you can do is you sold here, but you cannot expect market to go that much. See, so what you need to do is you sold here, and you have to, you can, this much you are guaranteed a 6 point, but you cannot expect more than that. Why? See, market corrected. Here is this real bias. There may be some more bias left there. So when market came, it shot up, eaten your already accumulated profit, then came back. So let me explain one more thing. So you sold here. Let's put a line there. What you need to do is you sold here. Then what you need to look is you go to the right. Okay. See, this is the last high taken out. Then market formed a correction. See, this is the correction. So you can happily target the top of this. So what we will get out of that? Let's see. But okay, let's put 13 pip stop. Let's target this high. you get 1 to 2. This is the guaranteed trade. This is the trade. This is the profit you are getting. So if you happen to sell two, three positions, you can take one profit one here, profit two here. Then the remaining position can run. This is the way you need to trade. So let's recap. Okay, previous high broken, the highest high broken, then you miss the first chance, you knowingly missing the first chance, let the stop run happens at that place. Then look for the volume for the clues, then trade, then where you target? Target this high, and there is a price action now. After that high, break of that high, create this kind of price action. You target the top of this. Okay, then one more clue in this. So market is falling like this. What you do? How you identify this is the bottom? You have to look left. See, these are the bottoms. See, this is a bottom, lowest low in that near frame. So okay, let's put there. So price is a tool for communication. So there are many players out there. So they often communicate to each other. See, if market comes and breaks this low, then there is a signal which sends wrong things to other people. Yes, the big guys don't want to give that. So so you bought here, right? You bought somewhere here. Where is going to be your stop? Your stop is going to be here. There's a massive number of stops. Oh, I will put that. There's a massive number of stops because of that. There's a massive number of, and sometimes they don't want to take that much stop because that is going to make push market and give a wrong signal. So why they don't want to take that? They don't want to take that kind of risk. So what they do sometimes, not often, what you need to do is this is the maximum pain level MP. You always target that second low, second last low or high. Let me put the style of this line to pinkish. This is MBA. So you buy here. You see, this is a falling knife. Where you want to buy, you buy here. This level you can buy happily. You buy here. Put some slides of line bits below. Some the safest stop is below this 4320. 423. Yeah, here. Then okay, I put the wrong symbol there. You buy at this MBL. Put a stop just below this line. Okay, let's put a line there. This is why we are placing stops here. This is the next point which is going to be arresting the price. So we put 3 4 ticks below. See, actually it's 420, so 460, 43160. Then you look for joint trade. You look for a big move because this fall, listen carefully. This fall put most of the trader out of positions. They don't have inputs either. They accepted the loss, or they booked the profit. Now they are flat because nobody like to trade when they see it like this. They don't want to. They won't make a decision. They all get paralyzed. Only smart people can trade this way. Okay, so the most of the people are out of the market. So you can expect a gigantic trade. Maybe 500. Let's see. This is what is happening. So So there are 2 points. One, see, this market, this bar is so big and made this much volume. The next bar is okay, open and came below, then closed up with this much volume. This is a clear indication that either shorts are covered or long positions are started. Okay, and you always buy the safest position, the second last low. You buy there, second last low. You can happily buy at the second last low. Already, you can buy this. So that's what is. I'm just concluding this. So okay, one more tip is simple things. So market is going up, straight line, coming down. Bear with me. I just screw up with the tools. Going up. Okay. So this is the area you need to look for buying or selling. This line is called MPL. Once market is above this trade setup is negated. So what you do is tip, tip. Once you enter here, you have a stop loss somewhere here. Once market breaks here, it often goes little up, then come back to this one, then you exit from the trade. Okay, then the reverse. If two laws are very closely aligned, most of the people who want to take profit here, so they start making buying here. So okay, here there's a little psychology here. Okay, you okay, let me put a line here so you can understand that better. Okay, all traders short or traders is short. This was a previous low, so they want to take the profit at the low. But what smart people do, they just start buying at this level. Hmm? Okay, let me show this properly. You are short here, you want to take profit here. If the big players or genuinely want to take the market up, they won't let the market go at this area. They just turn market from here, this point. Hmm? So psychologically, you are waiting market to reach here to take profit, but they won't make it. Then they slowly moving up. So you start feeling the pain when your profits are getting eaten. So you cover, and everybody covers. Then this covering of shorts give the fuel for this rise. Once it reaches here, there will be stops are piled up here. Then they eaten that stop, then market shorts. This is how things works. Sometimes, not always, sometimes. Thanks for watching. I think I am eaten a lot of your time. Thanks for watching. Have a good day.